All right, so you did mention an IRA. I know that's a really common place for a lot of people to start investing. Can you just explain what an IRA is and maybe
Yeah,
the difference between an IRA and a Roth IRA?
yeah, sure. IRA stands for Individual Retirement Account, and as the name implies, it has to be owned by an individual. A married couple cannot have the same IRA; they can have separate ones. Um, and it's a type of tax preferential investing account that is used for long-term retirement savings. Um, in exchange for this preferential tax treatment, the participant agrees to not use any of that money before age 59 and a half, which is a stupid number, but that's what the rule is. You can't take money out before age 59 and a half without really steep penalties. And there are a few exceptions for like a death of the family or something like that. But in general, you can't touch that money. Um, a
So
traditional,
will the money not be taxed at all, or is it just like a lower tax rate?
yeah, well, that's where the distinction between traditional and Roth comes in. In a traditional IRA, you don't pay any income tax for the money you contribute. So that reduces your annual taxable income for the year that you contribute. The trade-off for that is, oh, and then it also grows until you retire. Everything grows tax deferred. All of the appreciation in share value, all of the distributions of capital gains and dividends and whatever, that all grows tax deferred. But then when you do retire and start taking it out, you pay all the tax. You pay income tax on the principal that you invested, and you pay capital gains on everything that's accumulated since then. A Roth IRA has like a reverse tax preference where on the way in, it's all post-income tax. So there's no immediate short-term tax benefit. But then when you retire, everything you take out is tax-free. All of the appreciation, all of the distributions, everything is tax-free. And so it's generally a good idea if you only have a traditional account, at least some point before you're ready to retire, to sort of strategically move some of that into a Roth, what they call a rollover. You roll it over into a Roth and you pay a tax consequence while you're still working in exchange for not paying any tax while you retire.
Wow. So, I mean, is that something you recommend people look into as a first
Absolutely.
step?
Absolutely, yeah. An IRA is a great way to start. For me personally, when I opened my first one, I opened a Roth because my thinking was that I'd rather not pay any taxes when I'm done working. And there's different reasonings why you could do either one. It's sort of like for example, if you have a lot of 1099 income, it can be really useful to reduce your taxable income for the year that you're paying taxes. But if you have a lot of W-2 income, it's not as consequential to reduce your taxable income.
Right.
But it's a great way to start. And an advantage of an IRA over, say, like a 401k is that you own it and you take it with you forever, as opposed to like 401k, which is tied to your employer. So as you change employers, there's a lot of paperwork involved with and either moving it to your new employer or moving it into your own personal accounts.
Right.
It's a great way to start, and they have reasonable annual limits. You can contribute up to $6,000 for this calendar year and for last calendar year. So it's not a huge amount of money, but it's also significant enough that if you did that every year for 30 or 40 years, you'd be in great shape.
Yeah.